In my video last week titled 3 Stocks I'm Buying Now, I talked about Tesla stock. And I gave a very brief explanation as to why I was buying more shares of Tesla, even though it is currently worth more than GM and Ford combined. But after I posted that video, I felt like I left some things out. So in today's video, we will be doing a deep dive into Tesla stock with the goal of answering the question, is buying shares of Tesla a good long-term investment right now? So whether you are a Tesla hater or a Tesla lover, I do hope you will watch this video all the way to the end, as I will do my best to give you an unbiased view of Tesla stock, and I will be discussing some things you may have never considered before. Also, it helps the YouTube algorithm if you watch the entire video, so if nothing else, do it for me. As a long-term investor, the most important thing we look at is growth potential. For a company's stock price to go up, the company has to grow. So when we write out our investment thesis, the main thing we will be focused on is the growth potential of the company. And when I say growth potential, really there are two main questions that need to be answered. What product or service will drive growth for the company, and how much of the total addressable market, or TAM, can the product or service capture? So let's first focus on the product that Tesla provides, and then we will look at the total addressable market for each of those products. Tesla is most well known for its electric cars, and currently has 4 cars that it sells, including the Model S, Model 3, Model X, and the Model Y. In addition to those vehicles, it also has the Cybertruck and the Tesla Semi, which will go into production sometime in 2021 or 2022. In addition to electric vehicles, Tesla also has solar panels and solar batteries. However, a majority of Tesla's revenue last year came from their electric vehicle sales, so that is the product we will focus on in this video. Now, I do think as Tesla sells more electric cars, we will see a rise in sales for their other electric energy products, but that hinges on the success of their cars. So like I said, we will focus on that first. Let's take a look at the global car market to see what the total addressable market for Tesla is. Global car sales reached 54 million units in 2018, with the 2 largest markets being in China and the US. China purchased 23 million cars in 2018, and the US purchased 17 million. Of the 54 million cars sold worldwide in 2018, 1.26 million of those were electric vehicles, which might not sound significant, but from 2017, that number represents a 74% increase in electric vehicle sales, which is a big jump. The increase was driven by a number of factors. Firstly, Chinese demand for electric vehicles soared thanks to air pollution concerns and government incentives encouraging consumers to purchase EVs. The second reason is the success of the Model 3, which became the world's best-selling electric vehicle. And then you also have a renewed interest in environmental pollution in Europe after the Dieselgate scandal. So in my opinion, a large part of the electric vehicle growth was due to environmental concerns. For Tesla, the majority of its revenue in 2018 came from 4 countries: the US, China, the Netherlands, and Norway. However, over 50% of that revenue comes from the US alone. So let's focus on the US for now. Of the 17 million cars sold in the US in 2019, Tesla sold roughly 192,000, which gives Tesla a 1.1% share of the US car market. For comparison, the top car manufacturer in the US in 2019 was General Motors, who was able to sell 2.8 million cars. Ford and Toyota were not far behind, with Ford selling 2.4 million cars in 2019 and Toyota selling 2.3 million. So clearly there is a lot of growth potential for Tesla in the US car market. Tesla had revenue of $24.58 billion in 2019, with $12.6 billion of revenue, or roughly 50%, coming from the US. Which means that if we divide 12.6 billion by 192,000, we get a revenue per car of 65,500. Compare that to General Motors, which had $110 billion of revenue in the US in 2019 and car sales of 2.8 million, which means that General Motors had a revenue per car of $39,285. And if we do the same calculation on Ford, we get a revenue per car of $40,461 based on the 2019 revenue. So we can see that while Ford and GM had a lot higher revenue than Tesla did in 2019, they did have to sell a lot more cars to achieve those numbers. For example, if Tesla was able to sell as many cars as Ford did in the US in 2019, then their revenue would be $157 billion. And if they could outsell GM cars in the US, their revenue would be $183 billion. If we assume the stock price moves in lockstep with the revenue growth, we can now calculate the new stock price of Tesla if it is able to reach revenue of $183 billion in the US. So we will do 183 billion divided by 12.6 billion and then multiply that by the current stock price of 800 to get a new stock price of $11,591 per share. So basically, when you read articles about how Tesla stock could reach $6,000 or even $22,000 a share in the future, that is basically how people are getting these numbers. Now remember that the numbers I just calculated were only for the US and did not consider Tesla's car sales in other countries such as China. Which, remember, China represents an even bigger opportunity than the US, and we didn't even include it in the calculation we just did. On top of that, the calculations we just did only accounts for Tesla capturing 17% of the US car market, and the share price was still able to get up above $10,000 a share. So as you can see, the growth potential is quite large for Tesla if we just focus on the electric vehicles it sells. However, I do need to address one thing about Tesla stock, and that is the valuation. Currently, Tesla has a market capitalization of $151 billion, which means it is 4 times bigger than GM stock, which only has a market cap of $37 billion. Meanwhile, Tesla reported $24 billion in revenue in 2019, while GM reported $137 billion. So clearly, Tesla is not being valued like other car companies right now, and investors are willing to pay a premium for the opportunity of getting in on Tesla early. In fact, if Tesla was valued the same as GM, based on the market cap to revenue ratio, Tesla stock would have a market cap of $6.63 billion. If we take that $6.63 billion and divide it by the shares outstanding, which is the total number of Tesla shares in existence, we get a share price of $35. So you can see why some analysts have a very bearish outlook for the stock. In my opinion, the most important question that you need to ask yourself before you buy Tesla stock is, how should Tesla be valued? Is it simply a car company, or is it more than that? For example, if we compare the revenue to market cap ratio of Tesla to a technology stock such as Netflix, we get a much more favorable outcome. Netflix has a market cap to revenue ratio of 9.32, whereas Tesla has a market cap to revenue ratio of 6.14. So you can see if we use Netflix's valuation, you could argue that Tesla is actually undervalued at the moment. And if we compare it to Apple, which has a market cap to revenue ratio of 5.3, we can see that Tesla is not as overvalued as one might think. So you are starting to see how polarizing of a stock this is, because it is very dependent on how you characterize the company. Is it simply a car company, or is it a technology company? And what about the artificial intelligence technology it is developing? And what about its solar energy products? In my opinion, it is unfair to Tesla to compare them to current car companies, because there are many more growth products the company has in development, and the company is really more of a technology stock than strictly a car manufacturer. On top of that, I don't think you can really compare Tesla to current car manufacturers because the products are so different. In my opinion, it would be like comparing an iPhone to a flip phone. The iPhone was a better design, had increased functionality, and just offered a better overall customer experience. So really, while most people scoff at the price of a new Tesla, I've read article after article of people talking about how exciting driving an electric car is compared to driving a gas car, and this is where I think Tesla has the upper hand compared to current car manufacturers. For one, gas-powered cars have been around for over 100 years, which means there has been a lot of technological advancements and improvements that have allowed car manufacturers to lower the cost to produce their cars. But the rate of that technological advancement is starting to slow, meaning that it is getting harder and more expensive to improve gas-powered cars without creating a rise in manufacturing costs. However, electric vehicles, specifically electric battery technology, is still in the early stages of its development, which means that there is a lot of room for improvement in the efficiency of the batteries and the materials used in the battery. This is important because currently the batteries used in electric cars accounts for 50% of the cost. So as battery technology improves, we should see the cost of the battery come down, and the performance of the battery go up. In addition to battery technology, electric cars are much more simple to manufacture, so automation of the manufacturing process will be easier, which will also cut costs. Now, I know I talked a lot about the positives of Tesla stock in this video, but there is something that all investors have to keep in mind when purchasing a stock, and that is how long do you expect for the growth potential to be realized? And when it comes to Tesla's cars, there are a lot of pain points that make them unrealistic for a majority of Americans to buy. The average selling price is still out of reach for most car buyers, with the average price of a Tesla being around $55,000. Now, that's not to say new gas-powered cars are super affordable either, but $55,000 is a lot of money for the average American to spend on a car. Also, you have the limited range of electric vehicles and extended charging times when compared to gas vehicles. And that's why if we just look at the rate of adoption for electric cars in the US, we might be left with the feeling that Tesla is a little bit too early to the game, and that maybe we as long-term investors can wait a while before purchasing the stock. But things changed drastically for Tesla when they opened up their factory in China and began producing cars for the Chinese car market. China, unlike the US, is ready for electric cars right now, mostly because of a need for electric cars to combat air pollution issues in major cities. Also remember that China is the world's largest car market, so this presents a huge opportunity for Elon Musk and Tesla. And it's no surprise that we see a correlation between the first deliveries in China and the performance of Tesla stock. Looking at the chart of Tesla, we can see that the stock went on a huge run, rising from $334 per share on December 2nd, all the way up to $917 per share on February 19th. That is a 178% gain in 2.5 months. So clearly, investors felt like the opportunity in China was quite compelling. Overall, I do think Tesla stock presents a good long-term opportunity right now. And I don't think you need to bet the farm on it, but buying Tesla stock right now as a small position in your portfolio is not a bad idea in my opinion. In fact, Tesla right now is the 5th largest holding in my high-growth stock portfolio, accounting for 2.8% of my portfolio. So it's not a huge part of my portfolio, but I am buying additional shares right now. And I want to stress that it is important for you to be confident in your investment decisions. The worst thing you can do is buy a stock because someone on YouTube tells you to. So the point of this video was to help you become a more confident investor and give you some things to consider when it comes to Tesla stock that you may not have ever thought about before. But at the end of the day, it's your money and it's your responsibility to invest it how you think is best. So if you want to learn more about investing or you are looking for other high-growth companies to invest in, make sure to subscribe to my channel. And gently tap that like button so other people can find this video. So with that, guys, thank you so much for watching, and I'll see you in the next one.